Japan is facing some problems. Their economy is falling, their currency is crashing, yet their stock market keeps booming. And the reason why you want to pay attention to this isn't just because now you can afford to live like a king in Japan. It's because Japan is the largest owner of United States dollars. The only entity that owns more United States debt than Japan is the Federal Reserve Bank. What does that mean? Think of it this way. If you owned $1 million home free and clear, you had no cash in the bank, and then your credit card bill came in and it says you owed $30,000 on your credit card, well, what would you do? You probably have to sell your home to get some cash to pay off the credit card. You have to sell off your assets to pay off the credit card bill. If Japan can't pay their bills, and they need to sell off some of their assets, aka United States dollars, United States debt, that could impact your currency here in the United States. And that's why today I want to go over 4 things. Number 1, I want to go over what's going on with the Japanese economy and why they're seeing a recession right now. And number 2 is I want to go over why the yen is crashing, the currency. Number 3, I want to go over why this and how this affects the United States. And number 4, I want to talk about how this can create investment opportunities for you and how you can find opportunities. So let me start by talking about number 1, what's going on with the Japanese economy. And before I do that, I want to give you a quick reminder that on August 15th, 1971, the dollar was taken off of the gold standard. And this August 15th, 2024, it is going to be the 53-year anniversary, and because of that, I'm hosting a live, free, and virtual investor summit on August 14th and 15th, where I'm going to be going over, number 1, how money has changed over these decades and over the last few years, but even more importantly, number 2, how you can find investment opportunities in this changing economy, because money has changed and our economy has changed, and you need to know how you can find new investment opportunities to build wealth. So if you want to join me on this live, free, and virtual investor summit, all you got to do is register, and I got the link for you down in the description below. Jumping into the Japanese economy, back in 2010, Japan lost their title as the second largest world economy when China overtook Japan. And now in 2024, Japan just lost their title as the third largest world economy when Germany overtook Japan. So why is the Japanese economy getting hit so hard? Well, according to BBC, Japan has been hit by a drop in exports and consumer demand. I'll talk about what's going on with exports when I talk about their currency, but when it comes to consumer demand, one of the reasons why consumer demand has been falling in Japan is because, well, there's less people buying stuff because the population in Japan has been falling. Less people means you have less people buying things, but that still doesn't cover the full picture, because to really understand what's going on in the Japanese economy, you got to understand how the Japanese central bank works as well, because the Japanese central bank has held a much looser monetary policy than they have here in the United States. What does that mean? Well, up until very recently, Japan has had what's called negative interest rates. The Japanese central banks raised interest rates for the first time in 2024 after 17 years. Now, this whole concept of negative interest rates is pretty hard to wrap your head around, because we all understand positive interest rates. You go to the bank and they charge you a positive interest rate. They charge you 7%. That means you got to pay 7% back to the bank. But what does negative 1% interest rates look like? It doesn't mean that you get to go to the bank and they pay you to get a mortgage. What it means is that banks are incentivized to lend you money. Because remember, these interest rates set by the central banks are not the interest rate you pay to get a mortgage or your credit card debt. It's the interest rates that banks charge each other when they get money. So banks are being incentivized. They're essentially being paid to issue more loans to stimulate the economy. And the reason why is because the Japanese economy has been working to fight deflation for the almost last 2 decades. And in order to fight deflation and to keep stimulating the economy, they've been trying to create more inflation by issuing these negative interest rates, to issue more loans, to have more currency enter the economy. That way they can keep inflating and growing the economy. And this led to the inflation issues, which is now forcing Japan to start raising interest rates, which has also helped to slow down their economy. And this brings me to point number 2, what's going on with the Japanese currency, the yen, because the yen has been losing value very quickly. But what does that actually mean for a currency to lose value? See, your currency, what we call money, has to lose value relative to something else, and the yen has been losing value relative to the United States dollar. Now, to most people, what this means is if you take $100 to Japan today, your $100 is going to buy you a whole lot more stuff than it did last year. But I want to focus more on a broader economic level rather than what this means for you going on a vacation. Now, there's been 2 different things happening. Number 1 is the United States dollar has stayed relatively strong relative to these other currencies, and the yen has been falling. And one way to understand this is just by looking at the interest rates that the central banks in these 2 countries have set. Because in the United States, the interest rate set by the Federal Reserve Bank is right around 5.25% right now, versus in Japan, their interest rate is around 0 to 0.01%. Essentially nothing. And this is higher than what it was before because before Japan had a negative interest rate. While Japan has struggled to get prices and wages to rise after decades of economic stagnation, the United States has been battling to bring prices down amidst robust economic growth. See, these are two very different issues. The United States has been using interest rates to fight inflation, and Japan has been using interest rates to fight deflation. Kind of different. Which brings me to the topic that I was discussing a minute ago, which is, are weak currencies good or bad? Well, it depends on who you ask and what your goal is. Now, normally you would say a strong currency is good, but if you ask somebody like China, you'll see that some countries like China prefer these weaker currencies because that makes exporting their goods a little bit easier. Because if you want to buy something with United States dollars from China, it's cheaper for you. And you're more likely to buy something from some place where it's cheaper. Like you'd rather go to Macy's when it's on sale, right? It's the same thing when it comes to countries. You'd rather spend your money where your dollar can stretch further, which is why some countries like China have actually preferred their cheaper currencies up until now. And this is where Japan has been struggling with exporting, and maybe these cheaper currencies can help them encourage doing more exporting because the dollar can extend even further in a country like Japan. Plus, this also incentivized a lot of Americans to go and travel to Japan. This brings me to topic number 3, which is how does this affect the United States? Because Japan has a lot of United States assets. They're one of the largest investors into United States debts. What that means is that when our United States government goes and spends money they don't have, they will issue what's called a treasury. A treasury is a loan that you can invest money into, that you're lending money to the United States government, and Japan has been buying a lot of these United States treasuries. Out of all the countries in the world, Japan is the #1 largest owner and holder of United States treasuries. So that means Japan has this big asset, which are United States dollars, United States loans, and that's sitting on the Japanese balance sheet. And if Japan continues to struggle financially, that poses the risk that they could potentially start dumping these treasuries, which could impact the value of the United States dollar, because the worry is that could flood the market with more treasuries. Well, now it looks like that might have started, at least to some extent, because it seems like Japan has been selling off some of their United States dollars. That way they can go out and buy more yen. That way they can help stabilize and support the value of their currency. Now again, what does this mean? Well, in terms of the dollar, if you have more dollars entering the circulation, that could lower the value of the dollar. Which is why you want to pay attention to what's going on here because, well, the United States dollar is just a paper currency. It's not backed by any precious metal. So if you start flooding the markets with more dollars, it could manipulate the value of our own currency here, which is why you want to understand how money has changed, which is one of the topics that I'll be talking about in this Investor Summit. Which brings me to part 4 of this video, which is how can you find opportunities here? Now, I'm going to be completely honest. I am not a very sophisticated or a very educated international investor in that sense. So let me just read you an excerpt from Reuters. The title is How Hedge Funds Play a Weak Japanese Yen. And the first trade that they talk about is shorting Asian currencies against Japan. And the second trade that they talk about is being long Japanese stocks that might have gotten hit through this economic downturn. Now, a couple points that I want to make here. Number 1, investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. Number 2, shorting is extremely risky. It's not a game that I play, so just understand the high risks with that. And number 3 is understand that when there's blood on the streets, there's opportunity to be found. So you just got to understand what is the right investment opportunity for you. And if you don't understand something, don't throw your money into it. Do your own research, just understand what's happening in the world and then find the right opportunities for you. So if you got some value out of this video, I would love it if you could hit that thumbs up button, subscribe to this channel, and if you like this video, share it with somebody who will like it or somebody who would hate it. According to some, this is the strongest economy of all time.
I know what it took to take our economy from the depths of the pandemic to where it is today, the strongest economy in the world.
But not everybody agrees.
When inflation's killing our country, it is absolutely killing us.
I want to give a real update as to what's happening with our economy right now.